Rohit Srivastav is joining us this morning to help us understand what's really going on. Why so much negativity in the mood of investors this morning, Rohit?
Well, a lot of today's movement, I think, will end up getting associated to what happened overnight in global markets
Yeah,
because they've pretty much gone up one way in the last month,
yeah.
and especially before the Fed meeting, and a lot of that is being given up. So that's, I think, causing some of the reaction. But the domestic market itself had neither participated much on the upside in line with a lot of Asia and is appearing much weaker now. I think mostly because the growth for the quarter has actually not turned out that great when we actually look at numbers. And in any case, that was not the expectation. I think people have been, expecting that this season, which is the festival season, which will kick in numbers, which will actually show up in the next quarter results. So for the time being, it was not looking so great. I think a lot of the correction that we are seeing is essentially a pullback to the rally that we've had in October.
Okay.
Uh, but what we did notice also in October is that the broad market, that is the mid and small caps,
Yeah.
did not perform very, very well. It was mostly a large cap driven up move. And the mid and small caps are actually falling very hard yesterday, and I think possibly could continue today. But having said that, we should be at the end of this pullback because most of the levels that we were anticipating on the downside have been reached. We're also getting some short-term oversold signals right now. So I think we are at the fag end of this pullback and should be, quickly looking at a turnaround or recovery in the coming days. So that's what we need to prepare for.
Okay.
It's a good pullback, but it's an opportunity to really get invested for the next move to new highs.
Right. So do you think we've pretty much scratched the bottom, or do you think we can take more hits given what happens by way of policy in the United States? Simply because we haven't really seen the upsurge trickle back into the Indian market, but the downward momentum is actually flowing a lot more faster.
Yeah, I think it will happen. It's all an eventuality. We've been hearing a lot of positive stuff from both our side and the US side as far as the trade deal is concerned. We've already taken measures on the tax side. I think the only thing pending is to see some more interest rate cuts, which I think were due in the last meeting, but he didn't move ahead because he didn't think we had sufficient transmission. But I think rate cuts are more than overdue, and it's not going to be just a domestic event. Globally, interest rates are, especially from the US, are going to be cut into 2026. As Powell moves out and a new Fed chair comes in, the move is towards lower rates. Now, why is that important? Is that essentially ends up signaling a weak dollar. So even yesterday, as US equities were falling, we've actually seen the US dollar fall. And that environment is usually very good for emerging markets. India essentially, if you look at, in Asia, has been recently, at least in the last 4 5 months, worst performer within Asia because we are stuck with this deal announcement and slow growth, and we need that to get off the table for us to purely look at the growth aspect along with the rate cut. I think that would set the stage for a strong rally. And outperformance of emerging markets is the theme that's going to play from here into 2026.
All right. Hopefully that happens to be a promising theme to play. But for investors right now, you said that this could be perhaps a time to go and accumulate some of those quality stocks. So which are some of the sectors that you think are right now at a value where making some purchases on these dips would be fruitful for retail investors?
So in terms of value, I think the areas where we actually seeing growth has been the non-banking, financial stocks. They've actually shown good numbers over several quarters, and over time they became extremely undervalued because they were not performing. But 2025, they've been among the top performers, and I think on declines they should be looked at. There's also within private banks, I would look at the second line, not the big ones, not just the HDFC or Kotaks of the of the world. But the second line is where we're actually beginning to see performance, and these are these are banks that are trying to grow and are smaller. And if they start showing price performance and growth, the combination is pretty good to see good returns there. So that's another place to really look at because it's pretty much been ignored, and they've lagged behind the market for quite some time. So that means financials broadly is what I'm saying is one of the comeback sectors of this year. where we would focus. The other one is metals. My metals were great performers in 21, 22. They've also done well this year in terms of hitting new highs. We saw a very sharp pullback yesterday in the metal space. But what I mentioned earlier in terms of lower rates and a weak dollar, both of them really fuel, metal stocks. For example, few would be aware that aluminum prices are actually hitting a multi-month high as of now. And in light of that, when you see negative news say around Hindalco, which we saw yesterday, the aluminum space is actually very interesting because it's making a comeback. Earlier, we were only seeing copper prices, but now we are seeing aluminum prices pick up, which is a good sign overall,
Okay.
for the commodity cycle.
All right. And what about investors who are, let's say, looking at the overall domestic growth category, where we've seen that now this GST reduction has pretty much translated, but people are assuming that Q3 numbers are going to be much better than Q2 numbers, given this GST cut and the boost in demand that we've seen. How do you rate stocks of, let's say, the auto category or even FMCG for that matter?
So autos, definitely I like. FMCG, while it's good, it's not a sector that I like to delve into simply because in a growth bull market, I don't want to be allocated too much to defensives. They may help during corrective phases, but when the growth really kicks in, it's many other sectors that end up doing better, whether it's energy, power, all the related areas where we've seen growth over the last 3 to 4 years. So wouldn't really want to allocate to FMCG as a defensive. Want to be in the growth segments, but autos definitely are looking good and should do well.
All right. So auto is a yes for Rohit Srivastav, FMCG not so much. And, question I often ask to all our market experts is India's IT sector, because the IT sector has had a terrible last 1 year. Is there any hope for recovery, no matter whether Fed goes ahead, cuts interest rates by another 25 basis points or not, whether Jerome Powell's replacement is more aligned with Donald Trump? Overall, how do you see the US economy picking up and the spending power within corporate America to actually send work back to India, and work that may be relevant for India's IT companies to perform for them?
Yeah, IT is a pretty tricky segment because the margins have been getting squeezed year after year for 2 decades. In fact, I put out a chart on social media showing the ratio of the Nifty 50 to the Nifty IT index, and we are still below the 2000 high. That's for 20 years you've not been able to cross the all-time high on the ratio, which essentially tells you that you have significantly underperformed. There have been periods of performance like post-COVID. For a 2 year period, the IT sector did exceedingly well. But when you take a 10-year period, then you're a non-performer. So the IT sector is lagged behind in that sense. Now, that doesn't mean that if the market picks up or the US economy does well, the IT sector doesn't get demand. But the problem really is not that they're not growing, but they're growing at a slow rate, and the bottom line is growing at an even slower rate because margins keep getting compressed. So that's the reason they tend to underperform the Nifty itself. And it brings me back to the same thing, that it's an avoid. It's not a sector you want to be invested in with a long-term perspective. There could be short-term trades, but long-term you'd want to focus on other growth areas.
So for the short-term trades also, Rohit, would you recommend perhaps the Nifty 50 IT pack, the sort of bellwether blue chip companies, or should investors look beyond the Nifty 50 IT stocks and pick up, let's say, a Persistent or a Coforge, which are down more than about 2%, more than 2% in trade this morning? Are those likely to see better growth potential going forward as compared to the Nifty 50 stocks?
So I'm not see, they've actually done that. The mid cap IT has outperformed the large cap IT, so that is a fact. But at this point of time, we really want to delve into it. I haven't really gone deeper into which of the mid cap IT stocks would do better than the large caps going forward. If we see that momentum build up, we may focus on it. But right now, we are just staying clear of the sector.
Right. Before I let you go, Rohit, there's also this update on Pine Labs IPO, which is opening today. That's almost a 3,900 crore rupee IPO, which opens today for subscription. The street has been abuzz with IPOs especially from the likes of startups across the board. And this particular Pine Labs offer is going to be open until November 11th. It comprises a fresh issue of as much as more than 2,000 crore rupees and an OFS of 18 120 crore rupees. Price range between 210 to 221, a grey market premium of just about 5% ahead of the listing. We've seen, Rohit, we've seen the Lenskart IPO play out. We are seeing the last day of the Groww IPO today. Excellent GMP. Pine Labs not as exciting, especially if you were to look at the grey market. But overall, from an IPO investment strategy, what is your view for our retail investors?
So fintech's a space that has done well on the market. The only problem has been when some of them come out at very high valuations. So I think that's what Lenskart tried to address by, staying within that 10x, market cap to sales ratio. So if you go very high on the market cap to sales, because right now most companies are being valued on their turnover and not the profitability.
Right.
If your market cap to sales is very high, then there is a risk that after it gets listed, it gets beaten down before it goes up. We've seen that in Zomato, Paytm, and other issues. But yeah, if you come up with a good valuation for investors, if it's less than 10x, market cap to sales, it's still within reasonable limits of what the market might, not punish when it gets listed.
All right. Yeah. I mean, I don't think punishment is what people are looking for. People are looking for a payday. But what should the overall strategy on startup IPOs be? Sector revenue numbers, profitability, obviously play a major part in deciding whether you should hold or whether you should sell your stock. But overall, do you think listing day gains on such high valuations is something that should be deployed as a strategy by retail investors?
If valuations are high, the answer is very simply yes.
Okay.
Because we've seen them get beaten later on. So if you get listing day gains, take that profit and then reconsider the stocks after the market has reset itself, over a 6-month period.
Yeah.
You know that, okay, this is a more fairer valuation that the market is giving it, and then you can re-enter.
Okay. So Pine Labs valuation of about 25,000 crore rupees, in your mind, extremely high valuation, or do you think it is pretty much in line with the growth in fintech which is expected?
So I haven't done the numbers, frankly. That's why I put out the valuation metric that, if you look at 10x, market cap to sales as a metric, if you find it fits within that, then it's fine. If it doesn't, if it's too far above that, then I think you need to be careful.
All right, Rohit Srivastav, let's leave it at that for this morning. Thank you so much for joining us and giving us your views right here on Bollywood Brief at 9.